What's going on, everybody? Welcome to another Ticker Fee video and welcome to the Ticker Fee family. So the symbol we're going to be talking about today is SENS, and so what we're going to be talking about specifically is the shareholder ownership structure and what that looks like with this company. So what we're going to be elaborating on is going to be the general, the private, and the public company ownership. How it affects this company, how it affects the charts. So we're going to finish this video off with a chart analysis and price prediction. I can tell you I'm so excited and finally to be back putting some videos out. Here lately, I have been crazy busy with my personal life and what's been going on. And so I am super excited to be finally again talking about the stocks and what the latest news is. And if you're here for the first time, welcome to the channel. And for those that have been supporting me every step of the way, thank you as always. And let's go ahead and get started. Okay, so what you're looking at here is with this company, it's cut up into percentage. So who owns it by shares? So you're looking at the public companies of 4.6%. So that's going to be roughly around 17,500 million shares. You've got individual insiders of 5.9%, which is going to cover about 22 million shares. You've got institutions with 16.6%, which is 62 million shares. Private companies, which is going to be a little bit higher of 18.2%, which is 68 million shares. But as you can see in this chart, this little pictogram here, you've got general public or retail investors at 54.6%, which is 206 million shares. So this is for you to be able to get a better understanding of what I'm going to be talking about. So keep this diagram in your mind. All right, so every investor in SENS should be aware of the most powerful shareholder groups. So large companies usually have institutions as shareholders, and they usually see insiders owning shares in similar companies. So this has a market capitalization of US of 884 million. So we would expect some institutional investors to have noticed of the stock, which I underlined. So what does the institutional ownership tell us about the holdings? Many institutions measure their performance against an index that approximates the local market. So they usually pay more attention to the companies that are included in major indices. So let's look at some of the highlighted areas. So hedge funds don't have many shares in Senseonics holdings. Looking at their data, you can see that the largest shareholder is HITOWA Holdings Co. with 18% of shareholdings outstanding, with 5.2% and 4.6% of the shares outstanding respectively. Now, on the studying of the ownership data, they find that 25 of the top shareholders collectively own less than 50% of the share register, implying that no single individual has majority interest. Now, why am I pointing this out? For me personally, I think this is a good thing because you don't have total control. If you don't have total control, you can't manipulate the stock. As you can see, like I talked about previously, the retail is the overall ownership of this company. So that's a really great thing because the majority of us are going to be able to decide where this stock needs to go. Now, insider ownership of this holdings, the definition of an insider can differ slightly between different countries, but members of the board of directors always count. Management ultimately answers to the board. However, it is not uncommon for managers to be executive board members, especially if they are the founder or the CEO. So let's look at the three different types of ownerships. So you've got general public ownership. So the general public, who are mostly retail investors, collectively hold 55% of these shares. Now, this level of ownership gives retail investors the power to sway key policy decisions such as board compositions, executive compensation, and the dividend payout ratio. So this is what I mean. It is a great thing that you have general public ownership. Now, with private company ownership, it seems that the private companies own 18%. So private companies may be related parties. Sometimes insiders have an interest in a public company through holding on a private company rather than in their own capacity as an individual. While it's hard to draw any broad stroke conclusion, it is worth noting as an area for further research. So then let's look at the public company ownership. So that's going to be 4.6% of the holdings. Now, we can't be certain, but it is quite possible that is a strategic stake. The businesses may be similar or work together, so always keep that in mind. Now, while it is well worth considering the different groups that own a company, there are other factors that are even more important. But what I want to point out after this is show you a few other companies that own this stock. And again, how is this going to affect the charts? So the question is, how am I supporting my thesis? Where am I going with what I'm talking about? Well, check this out. So as you can see, on April the 23rd, 2021, you've got Fidelity, which everyone knows who Fidelity is, a major company. As you can see, just here on the 23rd, they have an average share price of $3.42, or shares of 809,000. Okay. Now, why am I showing you this? The next one, you've got Fidelity Total Market Index Fund, Fidelity again, Alpha Cubed. It just goes on and on. And this is all just within April the 22nd and April the 23rd. If this company wasn't doing well, or if there was companies that were big large cap companies that were not believing in this company, then we would know this. They would not continue to buy these shares. So I just wanted to show you this and inform you, because this is really good information that, again, will give confidence for all of us that are owning shares in this stock. Now, the next thing I want to show you is you've got these few companies right here. Again, you've got April the 23rd, Highbridge Capital Management. Previous shares was 7.9 million, and now the current shares are 22 million. So the change percentage is 189. So again, I'm showing you this because clearly there are these major companies that are buying into the stock, which is only going to continue to grow. So I wanted to point these things out. And so the question is, so who is Highbridge Capital Management to me? Why are you showing me this? So Highbridge Capital Management, which was founded in '92, is a global alternative investment firm offering credit and volatility-focused solutions across a range of liquidity and investment profiles. So that includes hedge funds and so on. So you've got your financial institutions, pension funds, etc. Now, they are headquartered in New York, but why am I showing you this? It's going to be the last sentence. In 2004, Highbridge established a strategic partnership with JP Morgan. Again, another massive company. And so it's showing their brand and the importance of a company like this that is buying into our stock, which is great news. And so I need to show you this. That way, again, you can have confidence in what's going on with our stock. I'm sure you've been seeing the stock go up and go down, and you're probably wondering what's going on. So I want to try to clarify what's been going on in the market. So there are a few things. So first, I want to talk about retail taxes. So you're saying, well, capital gains is not a surprise. Everyone knows that. Well, actually, no. So if this is your first time, and what I'm talking about is 2020, if this is your first time collecting all this profit from buying all these stocks and doing short-term gains, you got to keep in mind, this is first-time retail investors who are just now having to pay taxes for the first time. They're not used to that unless they have been holding on to the stock long-term, a year or two. So what you need to keep in mind is there are going to be a lot of retail investors who are selling some of the stocks that they own in the market so they can pay for their taxes. So keep that in mind, because that's what I'm talking about. Now, the next thing is going to be financial reports. So you got your annual Q1 and your overall annual reports. So what are those results? So just this week and last week, you have large cap companies that are letting us know what the numbers are. And most of us, again, we like some of that data, and so that's going to affect the charts. Now, the interesting thing is you can see that some of these blue chip stocks have had great results and great news, but the stocks themselves haven't gained as much momentum as what you would think. So what is the reason behind that? Well, it's going to be the net value. So not the gross, but the net. It might surpass expectations by all the analysts, but you've got to keep in mind, again, the net value versus the gross. So there's that as well. And then the other thing which has been affecting the market is going to be the infrastructure plan. So you've got corporate taxing going from 21% to the possibility of 28%. Hopefully it'll be a little bit lower than that, but a 7% gap is pretty huge. So that is going to bring fear into the market, as well as the taxes for anyone that's making over 400 grand. So anybody that's to the point of being a millionaire, they're going to be getting taxed even more on capital gains. So that's going to also bring some fear into the market. So keep these all these items in your mind when you're watching the stock, and not just this stock but any other stock. Now let's actually expand and look a little bit closer. So we had a high of $5.56 on February the 17th. Where are we from there? Well, currently it closed today at $2.12. Now we had a major market correction in March, and then the halfway, a little over half of April. So we've got a few things that have been a little volatile that's going to affect our stock. Now, if we expand it, you can see just here on April the 21st, we actually had a green candle. So it means it closed higher than what it opened up at, which is great. Now, what was the volume? That's the question. 36 million. So then we fast forward to today, which I always like to see, but it's at 11 million. So we go from 36 million to 11 million. So again, there's that gap. So according to what the Q 2021 earning releases are, what we hear, and whatever the case is, again, it's going to affect our stock, especially when your stock is close to other sectors that are being affected and manipulated in one way or the other. Now, when I actually look at the overall stock itself, though, I'm not too worried at all. It has a great support line, and the resistance is a little bit less, I believe, than the overall support. So for me, I'm looking at Q3 and Q4 for this stock. I want to see it go between 245. I want to see that new support line to go over 3. So I'm looking at about 315 in the middle between Q3 and Q4. So towards the end of this year, I'm looking at October, November. I can clearly see it even get close to our highs again. So that's going to be my bullish. I've got quite a few shares of this company, and I enjoy talking about this stock. So if you own it, or if you're thinking about buying it, leave a comment down below. I am curious, and I always enjoy the comments. I really do appreciate when people are letting me know what's going on. But these are the things that are affecting our stock, and so I want to again inform you of my own thesis of what I've seen so far. Again, I'm not a financial advisor, but that is what I've been reading through all the reports. So hopefully this was added value for you to be able to make the decisions that you need. And I really do appreciate you listening to this video. And as always, welcome to the Ticker family.